So we all know the difference in a previous video between mortgage insurance and term life insurance. But this becomes more of a problem for older people. A lot of seniors now are going into retirement with mortgages. And the issue that they have with that is that when they try and get mortgage insurance with a bank, they cannot, because it's either too expensive or they just don't do it. So I'm getting a lot of calls from older people to buy term insurance to cover their mortgage. And that in itself creates problems because it's either way expensive or because of their health, they don't qualify for cheap mortgage insurance. But the issue is that they don't need it. And what I mean by that is that they don't need the full amount of insurance to cover the mortgage. And I'll give you an example. I was approached by a couple in their 60s, and they had a $200,000 mortgage. And it's very, very expensive. He is a diabetic. He's got some health issues. So does she. And the cost to buy a $200,000 term policy was way more than they could afford. So what I suggested to them is that statistics have shown that most older couples, when the survivor is left and the husband or the wife die, the survivor tends to move. They tend to sell up because the house either has too many memories, it's too big, it's too expensive to maintain, and they want to go back to their family. So I had clients, a husband and wife, and the husband passed away, and she ended up moving back to North Bay to be with her daughter. They had a $200,000 mortgage and they couldn't afford the insurance. So what I suggested to them is that they just buy enough insurance to get by until she can sell the house. Because that's the most important part of this, is having income or having money available to her to pay the bills until she can make that decision. So she bought a $50,000 policy on her husband and a $50,000 on herself. He was diagnosed with cancer, he passed away, and it paid out $50,000, and she was able to pay the bills and pay the mortgage until she sold the house and moved to North Bay. So even though her mortgage was $200,000, she didn't need to buy $200,000. She only bought $50,000, and that was enough to solve the problem. And that's what I'm thinking of for older people who have mortgages and are worried about buying insurance.